Okay, thank you. So let me initiate the recording first. I already started this recording session. So I would like to welcome everyone in our Wise Crypto community, which is your favorite crypto space in the crypto industry. I can say like we're here for like few years, not for years. I can say like 5 or 6 years in the crypto. So like today we're going to be like discuss more about Umoja and their plan and program and everything, guys. So Umoja protocol is a crypto asset factory, and also like they can create any asset using tokenization, like tokenizing trading strategies that like produce the better yield and like protection than anywhere else in the crypto. But here is we have our speaker, Robby. So I'll like invite him. So Robby, could you please say a little bit about yourself and your experience, like how you getting this project, first of all?
Yeah, no, I definitely appreciate the time. So, hey everyone, Robby, founder of Umoja. Very brief background on myself. Been in crypto since 2011. Started my career at Goldman Sachs and was the former head of social impact at Consensus. So, effectively, all my adult career, I have been building software, particularly decentralized applications, both in a social impact context and also in a capital markets context. And to your point, very simply, Umoja is an asset management protocol that provides effortless, low risk, high yield crypto for everyone. So what does that mean? We effectively create cryptocurrencies that trade themselves. So just like a Tesla can drive itself, the assets that we create can trade themselves. And what this enables are tokens that can protect against risk if the market's going badly, or optimize yields. So basically, it's like putting a pro trader in your wallet and you not having to use the protocol or anything else that's confusing at all. You just hold or just swap. And so that's what we're focused on doing. But of course, for people who are more technical, who are already traders, we also enable you to access the automated strategies behind those cryptocurrencies themselves if you want to use those things more directly.
Okay, yeah, thank you. Yeah, got it. And also, like as I mentioned, you have your like their website, guys, umoja.xyz, so you can make your own research definitely to learn more. So there is another good question for you, like how does your Umoja asset management protocol convert altcoins into the smart coins, and what advantages does this conversion offer actually?
Yeah, absolutely. So the way that we do that is we will create these trading strategies. These trading strategies can be focused on different things. They can be focused on arbitrage, creating arbitrage between multiple exchanges. It could be focused on hedging losses if the market's down. So a lot of different strategies. And then we effectively tokenize them into NFTs. So effectively, that strategy can be embedded into a cryptocurrency itself. So we take that NFT and we assign ownership by an ERC20 smart contract, or effectively a cryptocurrency smart contract. And now you have a cryptocurrency that owns a strategy that basically can take its own value and put it into that strategy and trade it itself. And so it's like putting an engine inside of the cryptocurrency itself. And so that's effectively how we transform altcoins, be it ETH or SOL or ARB or AVAX, into tokens that actually are smart, that are actually trading themselves. So that's what we mean by that, is being able to take one base cryptocurrency and effectively pairing it with a strategy so that you create a new cryptocurrency that is trading that value itself.
Okay, yeah, got it. Thank you. So, like as I mentioned earlier, like people can create any asset using the tokenizing trading strategies that produces the better yield, and like you are enabling a world where anyone and anywhere can build the wealth by customizing extremely liquid, high performance like assets. So, I have a question on this. Like, could you share actually like can you explain actually how your Umoja's protocol allows for the creation of various assets within the better yield and protection?
It's just based off these strategies. So, on the Umoja protocol, we have what's called synths. Synths, all the synth means is automated strategy. And so it's by enabling people to access these strategies or by enabling them to use them to create new assets. So just like in traditional finance, you have structured financial products, you have indexes or indices, right? Or various different types of derivatives. These are all structured financial products that do a specific thing. And in crypto, these don't really exist, right? You don't have many structured financial products in crypto that enable, say, a retail investor to be as, successful as a pro trader, right? And that's what we're trying to create. We're trying to create assets or tokens that enable you the same amount of strategy and sophistication as a pro trader without any of the work. Because as we know, most people don't use dApps, right? Most people just hold cryptos or trade cryptos. And so we're trying to make something that is as easy for anyone to understand and use, but they still get the advantages of somebody who is day trading all day or like a hedge fund, right? And so at the center of all that are the strategies themselves.
Yeah, thank you for this. Thank you, got it. Do you have a token, Robby, right now? Like if yes, could you share something about your like tokenomics and how does your token work in your ecosystem? And like, can people do stake?
Yeah. So we do have a token. It's not out yet. Our TGE is going to be in late August, early September. But we will enable staking and swapping soon, this month, in fact, in June, where you can stake other assets like USDC and you can earn an APY, or you can swap those assets with some of the smart coins that will be launching in early July. The utility of the governance token, Umoja, is fourfold. So obviously, one is governance. So we use V tokenomics borrowed from Curve Finance and Balancer. The second is insurance. So you can stake the token to an insurance pool, which is just reserve capital to protect users from black swan events or smart contract exploits. So, we want to make sure that all users' capital is protected in the event in which, you have a crypto market crash or somebody infiltrates the protocol itself. The third is discounts. So just by holding the token, if you use any function on the protocol, you get protocol fee discounts. And then the fourth, which I think is the most interesting, is working lottery. So working lottery is basically anyone who holds any protocol native asset. It could be the Umoja token itself. It could be a smart coin. It could be a staked token. Anything that's related to the protocol, they automatically become eligible to a lottery. And that lottery allocates rewards in USDC to that holder. Now, the only way that they can unlock that reward is that they have to take an action on the protocol, like swap or stake or do something on the protocol, and that unlocks the reward. And that's why we call it a working lottery. You get chosen, and you have to put in some amount of work to unlock your rewards. And so basically, regardless of what the Umoja token's price is at any given time, you're always eligible to receive money. And we build in utility like that so that you're less focused on the token's price and you're more focused on, just being a community member and getting the advantages. And so that's the aspects of utility for the token.
Okay, yeah, got it. Thank you once again. So yeah, guys, there are two forms of staking on Umoja right now available. The first one is insurance pool staking, and also the second one is governance pool staking. So you can check out their white paper to learn more about the staking section, staking actually, and also there you'll find the procedure how to stake the insurance pool and also what are the requirements there. So just do only your own research actually. So you have your automated trading I can see here. So what are some examples of trading strategy that is utilized by Umoja to optimize returns for investor, and how does Umoja ensure liquidity and high performance for the asset it creates?
Yeah, so one example are synthetic options. So right now, if you go onto Umoja.xyz, you'll notice that even though staking and smart coins aren't yet launched, the one thing is launched are synths, or the automated strategies. And so the first automated strategy that we have on there are synthetic options. So what is a synthetic option? basically it is a strategy that mimics crypto options. And all an option is just a bet on price. A call option is a bet that you think the price is going up. A put option is a bet that you think the price is going down. So that's all options are. It's just betting on the prices of crypto or any asset. But the issue is that in crypto, options are very, very expensive and they're very illiquid. And also you can get liquidated, right? You can lose money, using options, right? Because if your bet goes wrong and you're borrowing a whole bunch of money, things can go badly. You can get liquidated. And so this strategy basically provides you 10x leverage, and it eliminates your liquidation risk. So that means that you can bet 10 times more money than you have, and you cannot get liquidated. And that, how to effectively do that is embedded within the strategy itself. So basically, it is a cheaper, more affordable, less risky, and easier to use option than anything that you can find on Binance, Bybit, anything, any protocol, any exchange. And so that's an example of a strategy that you can use directly now, but also this strategy can be used to create new smart coins. For example, I'm sure that you all are familiar with STETH or staked ETH, right? So for those who are unaware, you can take ETH, go to Lido, you can stake it, you'll get STETH, and STETH gives you an APY of about 4%, 5% sometimes. Now, the issue with STETH is that if ETH goes down while you're staked, you suffer in permanent loss, right? You lose money, which is not good. And also, 4 to 5%, that's not a lot of APY, especially when you have things like Athena and USDE that's giving you 30%, 40%. And so you can take STETH, you can combine it with a synthetic call option, for example, and you can create boosted STETH, which is, an upgraded version that provides you even more yield than you would otherwise get by reinvesting STETH yield into the synthetic call option. So basically, think of it as just combining things. You take one strategy, you take one token, you combine it, you create a new token. And this token has certain advantages that the original token did not. And so right now we have synthetic options as an example of how to achieve higher yields or how to have deep liquidity without any of the risks that the original asset had.
Okay, yeah, thank you. Thank you for explaining this. So, and also guys, there is an announcement, don't forget to join their community. I already shared as I mentioned. So I can see, as you mentioned, Umoja is an asset management protocol that uses smart coins to the automate money. And it just like a Tesla that can drive itself. So could you share how can you assure that you're self-driving protocol, and also what kind of technology you are just using that is similar like as Tesla?
So, one technology that's similar is AI, right? So obviously, the way that Teslas drive themselves is they take a whole bunch of driving data from all the people that own Teslas that have, allow their data to be used. And it enables better self-driving using that data, right? It trains itself to drive. And so just like a Tesla trains itself to drive better by itself, our smart coins train themselves to make better yields or avoid risk by trading themselves, right? And the data that they're using is, trading data that's online, or equal, available to all of us, market data, right? And so that's effectively the similarity is that all of these strategies are AI quantitative strategies. They're the same strategies that hedge funds use to facilitate high frequency trading, right? And those strategies, they train themselves based off of what's happening in the market in real time. And so effectively, again, I always like to say it's like putting a pro trader in your pocket. Right now, the asset itself is doing the trading and is literally working for you. You don't need to learn how to trade anymore. And that's effectively our goal. And obviously, again, one part of that is the strategy itself, and the other part is the base token or the base asset that's being traded. And so that's the similarity there.
Okay, yeah, thank you. So I can see a lot of hands already raised actually. So guys, I have this few questions left, no worries. So let's talk about your security and transparency.
Yeah.
So how does your Umoja actually like ensure transparency and security for investor who actually like utilize its asset management services?
Yes. So the protocol has received 3 audits since Q4 of last year. We've had an audit from QuantStamp, we've had an audit from Cyberscope, and we've also had an audit from Hacken that will be announced this Thursday. And we'll likely have probably one more audit before our mainnet V1. We also do a lot of sensitivity analyses on all of our strategies. So sensitivity analysis is basically simulating every market, condition that can occur for that particular strategy and seeing how that strategy does. And at any point, does that strategy do really terribly or put the investor at risk, then it does not pass. It does not make it into production. And so it's by doing these tests that we ensure that the strategies are strong. And by ensuring that the strategies are strong, we ensure that the smart coins are strong, right? Because the smart coins are based off of those strategies. And so that's how we go about security. And then, of course, we also are going to have community, not community audits, but I'm forgetting the word, but, effectively bounties, community bounties. So we do bounties as well, open source bounties. To audit the code as well. And we'll actually have one coming soon. So if there's any developers on the call, you have an opportunity to earn some money by helping us make things more secure. But that's how we go about security.
Okay, so I can assure you guys they're highly secure in manner. No worries, definitely. So here's the last question. What is the future development plan, actually, long-term vision for Umoja's role within its cryptocurrency and asset management industry?
Yeah. So overall, our vision is to democratize wealth creating tools for the first time in human history, meaning making available globally a investment product that everyone can access and use with as minimal financial literacy as possible. Right now, that does not exist. And we're in a time where retail investors actually control most of the money in the world. So people like you and me and everyone on this call, combined, we control 52% of global assets under management. And by 2030, it'll be 60%. That's almost $84 trillion. So we control the most money in the world, but we make 4 times less ROI than institutional investors, than whales, than hedge funds, right? Which obviously that doesn't make any sense. That shouldn't be that way. And mainly it's because our overall financial literacy is low. Not everyone on this call is a pro trader, nor do we have enough time to be one, right? We got families, we have relationships that we have to maintain, etc. But also some of these opportunities just aren't available to us, right? I know in the United States, you have to be an accredited investor to access certain opportunities. That means you effectively have to earn over $250,000 a year or have $1 million net worth. If you don't have those things, you can't access those opportunities. And so, our roadmap is striving toward that vision. Now, what that looks like in practice, we have beta out right now. We've already done $23 million in notional transaction volume on Arbitrum. We'll have mainnet release over the next month or so. We'll be releasing our first smart coin, yield-bearing Bitcoin, or YBTC, in July. We'll have our TGE in late August, early September. And then we'll continue to introduce new smart coins like YETH, which is a better yield version of ETH, et cetera, over the long term. And the goal is within the next, fiscal year to reach $1 billion in AUM or $1 billion in TBL, which we feel pretty confident to do, given that we have, amazing backers like Coinbase, Blockchain Founders Fund, OrangeDAO, QuantStamp, et cetera. And of course, our team, outside of myself, from Google, MasterCard, Coinbase, Consensus, Harvard, list goes on. So, we try to put together as good of investors and as good a team as possible to achieve what is a very difficult but very possible vision. And that's effectively our roadmap.
Okay, best wishes like for your project, and also like as you mentioned, your mainnet going to be coming within this like the last month, like the previous month actually. So I can say we are waiting eagerly for your mainnet, and also people don't forget to join their community actually, make own research. So Robby, it's time to take some question from the community. Hope that you're ready.
Yeah, let's do it.
Okay, the first one is Julian. Hey, Julian.
Thank you very much for bringing me on. I'm really grateful, and I must say it's actually been a very, very informative space. So my question for Umoja protocol is, I would actually like to know what mechanisms are in place to handle potential liquidity issues, where, for instance, options are yield seen, especially during periods of high market volatility, and also what are the specific challenges faced during the transition from the pre-audit of smart contracts to the final audit, and how does Umoja address this to ensure robust security? Thank you.
So the first question you may need to ask again in terms of on the sense side, but I'll ask your second question first, and then we can get back to your first question. So with regards to the second question, in terms of the transition period from pre-audit smart contracts to production or final audit smart contracts. So, I mean, that transition is relatively easy. Right now, the first two audits, the first two audits of the three that we've done, that code is in production, meaning that that code is shipped and is in the current version of the protocol in beta right now. And that's the quant stamp audit, and that's the cyberscope audit. The Hacken audit and the community bounties audit, that is in a version that's not currently public. It's on staging on testnet. The transition, of that code to production is pretty simple. It's a combination of making sure, one, that you have the audit done in the first place to make sure that nobody can exploit or steal funds. But then the second part, obviously, is the interface. Is the interface buggy, right? Is the copy or is the language written, on the application understandable? Is it easily understandable, or does it confuse end users? And then lastly, as a part of the production shipping process, you also want to make sure that there's tutorials. So if you all go on umoja.xyz right now, you'll notice that there are many tutorials of me in the interface next to what you're doing to show you how to do it. And this will continue. We're going to put tutorials on our tokenomics, on our roadmap, on our updates on a weekly basis, on what's happening in our community. It's constant. And the reason why we do video content is because we notice a lot of protocols and networks in Web3 suck at that. And as you all know, I'm pretty sure that everybody on this call probably goes to the Git book and does a lot of reading and reads the white paper. But as you all know, that takes a lot of time, right? And so we're trying to make it simpler for people not only to be safe by doing the audits, but also to understand what they're doing so that, that they can do it more efficiently. And we do consider that a part of the security process. Now, for your second question, could you restate your first question in terms of sense so that I could understand better?
Okay, I was like, what mechanisms are in place to handle potential liquidity issues, especially during periods of high market volatility?
Yes. This is an excellent question. So how do we manage liquidity during periods of higher market volatility? So the underlying strategies, since each of those strategies is created in the context of high market volatility, because, and let's face it, crypto is a high volatility market, just in general. And so you need strategies that are going to take into consideration potential liquidation if things move very quickly, or potential black swan events if things go really, really bad, right? And principal protection, right? And so up until now, all of our strategies focus, for the smart coins at least, all the smart coin strategies focus on protecting your principal. And what does that mean? That means that the money that you put into a smart coin is protected, so that when you withdraw that money, you still have at least what you started with, right? That is very, very important. And for some reason, I don't know why, but no other project is focused on this. For example, Athena, USDE. USDE does not protect your principal. It may give you a 40% APY, but if we go into a bear market tomorrow, you will lose your money, because the strategy that they use is called a delta neutral position. It can have negative APYs, right? And where do you think that negative APY comes from? It comes from your money. And so that's how we deal with that. We stress test strategies to make sure that they protect your principal. And so when you go out into the market, we already know all the different things that could happen. We've already tested them. And of course, obviously, smart contract auditing is a part of that. But that's how we go into the market. Now, granted, there are some strategies like synthetic options that aren't built that way because they're not supposed to be built that way. They're not supposed to protect your principal. When you're going long, right? When you think Bitcoin's price is going to go up and you want to bet that it's going up, your principal is not protected because it's a bet. And so different strategies, depending on their objectives, are protected in different ways. Now, granted, just because you're making a bet and your principal is not protected, you can still protect that person from liquidation. You can still protect that person from, not having enough leverage or not understanding what's happening. And so there's a lot of different ways to protect somebody, but you have to protect them in a way in which the strategy can still do its thing. And so that's how we deal with that. Another thing is we use highly liquid liquidity venues, right? So for some of the strategies, they're based off of centralized exchange trading. For other strategies, they're based off of DeFi protocols. Some strategies you can't do because there's not enough liquidity within DeFi protocols. So you have to do them on centralized exchanges. Now, granted, over time, you want to transition those strategies to DeFi protocols because it makes them safer, right? You have lower counterparty risk. And that happens over time. But that's another way that you ensure that you have enough liquidity. And I would say, lastly, are liquidity limits. So there are some smart coins that we'll introduce that will have very strong yields and have virtually no consequences, meaning that you can't lose money. They're principal protected. Now, those smart coins, they don't have infinite volume, meaning that everyone can't use them. Only the first people who get into them can use them. And that could be $1 billion, that could be $2 billion limit. The way that we ensure that there's not too much is that we, one, set those limits, but two, the Umoja token holders, they get to access those assets first. So if there's an asset that we put out, like yield-bearing Bitcoin, for example, or YBTC, and you really want it because it literally allows you to monetize your Bitcoin without losing any of it, you might not be able to access it if you don't get a Umoja token. So that's one of the value accrual tactics that we use is we limit volumes based off of, the constraints of the underlying strategy so that those people are protected. And you do that by making things more exclusive.
Wow. Thank you
Okay,
very
thank
much,
you.
sir.
Yep.
And thank you for bringing me
Thank
up.
you, Julian, for your nice question. Thank you. So the next one is Elliot. Are you there? Hey, Elliot.
Yeah, can you hear me?
Yep.
Yes, go ahead.
Okay, my question is, when is a synth eligible for a payouts and what is the payouts if the market price reaches the strike price? Thank you.
That's an excellent question. So for synthetic options, so you're talking about synthetic options. The nice thing is that, let me first give you an overview as to how they're different from normal options, because that's very important. So synthetic options, it's a trading strategy that replicates or mimics the value, not the payout, of a normal option. And it does that by trading perpetual futures. Why is it better? It's better because it's more affordable. So when you replicate options using futures, you're using a much more liquid market. The futures market is 30 times more liquid than the options market. So it's more affordable because the underlying asset that's being traded, perpetual futures, are more liquid. The second thing, it's much more flexible. So obviously every option, it has a strike, right? And it has a term, has a maturity, an expiration. Now, options, they only have limited, options for what you can select, right? You can select 5%, 10%, 15% in terms of strike, or you can select maybe 5 or 6 choices in terms of term. That's about it, right? Otherwise, the options market would be too illiquid. There'd be too many unique choices. What's really, really cool about synthetic options is that you have no limit as to what strike and what term you can choose. You can choose any date and you can choose any strike because perpetual futures don't have terms. They're perpetual, right? So it's it's exponentially more flexible. And then it gives you more leverage. All synthetic options are 10x levered. It's built in. And then it also, there's no liquidation risk. The strategy automatically lowers your exposure before you hit the margin requirement. So let's say you start at 10x, but then you don't top up your collateral. it brings you down to 5x automatically so that you keep your collateral. And so that's why it's different and better. Now, another big difference is that a normal option, you are paying a principal, right? You are purchasing it, and the only way that you can get rid of it is to sell it to somebody else who wants it. Synthetic options don't work this way. Synthetic options, you don't pay any principal. You put down 10% collateral, and that collateral is used to start the strategy. And if you want to withdraw that collateral, you can at any time. So it's a lot safer because you don't have that counterparty risk. You can because all you're doing when you're withdrawing is you're just stopping the trading. You're just stopping the strategy, right? And what's even cooler, and this is coming up soon, is you can keep a position open and withdraw your profit at the same time. So let's say you're in the money. To your point, let's say that the current market price has hit your strike market price, and everything past that, you're in the money. You're making money, right? You can take your profit out of that position while you maintain the position. And you cannot do that with normal options, right? The only way that you can take your profit from normal options is you sell the option. That's it. And so to your point, how much money you make, right, when you're in the money, when the current market price hits the strike price is dependent on, which cryptocurrency you have a position on, right? It could be BTC, it could be ETH. And obviously, how much past the strike that current price goes, right? If you have a call option, meaning you're betting that the price is going to go up, and your strike is $70,000 for Bitcoin, and now Bitcoin is past $70,000, now it's $80,000, then you're making a lot of money because again, you're making that money times 10, right? Because it's 10x levered. It would be 10 times the amount that you would make of a normal BTC option. And so you can make quite a bit. There have been times, and in fact, just to show you how comfortable we are with these strategies we put out, I personally use these strategies with my own money. And I've been up like 50%, this year. I mean, I've made a substantial amount of money from the synthetic options. Now, granted, you have to strategize how you use them just like anyone else, right? They're not magic. Synthetic options are more risky to use versus the more yield-based strategies that protect your principal and they just, kind of trade for you. And so for traders like you, because I'm assuming you're a trader based off of the question, it was rather technical. Basically, it's going to enable you to affect your strategy much, much more efficiently and much more affordably than any exchange that you could trade on, at least right now.
Okay, sir. Thank you.
Yep.
Thank you, Elliot, for your excellent question. So the next one is Adel. Hey, Adel, are you there?
Okay. The question
Hey,
is,
Adel.
hello, can you hear me?
Yes, I can.
Yes, go ahead.
Can you tell us about the economic incentives provided to validators within the Umoja network, and how do these incentives ensure long-term network security and sustainability?
So it's a good question. I will modify it a little bit just to the context of a protocol, since we don't have a blockchain network. So we don't have in a traditional blockchain network, you would have validators, and validators are leveraged to create consensus, right? They're constructing the history of the network itself, of all the transactions. Now, obviously, in the context of a protocol, we don't have validators in that way, right? Because we don't have nodes. But what we do have are stakers, and we do have governors as well. And these entities, what they put at stake is capital, right? So when you stake the insurance pool, you are protecting people from black swan events and smart contract exploits. And in return, you get an APY from staking, but you also get other things as well. So the second thing that you get if you stake the insurance pool is that you can also stake the governance pool. So you can make even more money, right? By restaking your staked tokens, or what we call Umoja dollars, to the governance pool, earn more APY, and you also earn, obviously, governance influence, right? But not only that, you become more eligible for the lottery rewards that I talked earlier. So someone who has Umoja tokens in their wallet versus someone who has staked Umoja tokens and governance tokens in their wallet, that second person has more eligibility to win lottery rewards, right? So not only is that other person making 2 APYs, one from the insurance pool, one from the governance pool, but they also become more eligible for lottery rewards. So there's 3 different types of incentive mechanisms for, the participants, right? The stakers within our community. And I would say the last one is exclusivity. Remember, for every structured asset that we put out, every smart coin that we put out, right? They don't have infinite volume. They can't support everyone adopting them. They can only support some people adopting them. Once it hits that limit, no one else can access it unless somebody else sells. And someone who is staked in that way, right, or a quote unquote validator in the protocol context, they're going to be able to access those benefits before somebody else. And so, to kind of summarize, I would say APY from the insurance pool, APY from the governance pool, increased lottery reward eligibility, and exclusive access to smart coins. Those are the incentives.
Thank you
Thank
very
you.
much.
Yeah,
Yeah.
Adel, could you please set up your user's name so that I can call by your user? There's no username actually. So Adel, do this.
Okay, thank you.
Okay, yeah, thank you for your question. So the next one is I unmuted one person. I forgot the name actually. I'm trying to find out. Okay, so yeah, Tommy. Hey, Tommy.
I'm audible.
Hey.
What opportunity for community leadership, mentoring, and activist development does Umoja offer its student?
Yes, absolutely. So, Omoniyi, who's on our call, he's our community manager. Him and our head of growth are been constructing a ambassador program. So we will have that coming out shortly, probably over the next month or so. So that's one opportunity. And we also have, very candidly, we have a separate Telegram channel for Umoja OGs. And so these are people who keep the conversation going in the main channel, use the protocol, give us feedback, give us ideas. And again, there's different types of users, right? There are some users that use the protocol and they find it useful for whatever they're doing. There are other users who are just retail investors. They just support the token, and that's fine as well. But those individuals can also give feedback. They can say, hey, Robby, we really would like you to do more videos on this, because we think that having that type of information out there would get other people like me to support this project more. And so we have a separate channel for those, super users, right? Super community members, where we talk to them directly. And of course, I'm in both channels, but obviously there are very few people in this channel, right? Because you're talking about a very few sum of tens of thousands of people that are a part of the Telegram channel. And so I would say those are the 2 biggest opportunities. In terms of mentorship, I do try to, be giving of my time in terms of those who are trying to create their own protocols or have ideas or, want to ask me about fundraising or, whatever it is that they're trying to do. Now, obviously, I only have limited time because I'm only one human, but but if you want to have that type of conversation for 15 minutes, I'm always down to do it. And you can DM me, and I'll find your message and we can talk about that as well. But those would be the 2 biggest ones. I would say generally it's better to try to message at me in the Telegram channel, just because I can see it. I have a lot of messages sent to me, and a lot of them go to archive, and I don't want to feel like like I'm ignoring anybody. But it's I definitely see it if you put it in the Telegram channel or in the Discord channel. And Almany and team are always helpful to me in terms of flagging those type of messages down. But yes, I would say that those are the opportunities or the things that are there.
Thank you.
Hey, thank you, Tommy. So here's the last one. Chom, are you there? Hey, Chom. Chom, are you there?
Hello, can you hear me?
Hello? Yes, ask your question.
Okay, my question is partnership and collaboration is very important for any crypto project. What are partners and what can our users benefit from their partnership? That's my question.
Yeah. So the partners that we focus on, there are 3 different types of partners that we focus on. The first, protocol partnerships. So, cross-community collaboration, trying to increase the size and engagement of our community by engaging with other communities and, swapping airdrop rewards or finding some mutually beneficial way to benefit each community. So that's one. So protocol partnerships. The second one is crypto trading KOLs. So any person that has a community that focuses on crypto trading specifically, we absolutely want to partner with you, right? Even if the community is small, again, it doesn't need to be tens of thousands of people, right? It could be 30 people. Just so that we can, offer benefits to those communities or get feedback from your community. So that's the second. And then the third are more institutions. These are going to be hedge funds. These are going to be on and off ramps. These are going to be centralized exchanges that can use the protocol in some way to generate a great deal of traction. So solving a problem for them by using one of our strategies or by listing, one of the smart coins. And then, obviously in doing so, generating direct protocol traction. Those are the 3 that we're hyper focused on. So, anytime, this is for everyone, anytime someone puts a proposal in our Telegram or our Discord, it's very, very, very important that you make sure that you're aligning your proposal with our core focuses, because we have to remain focused, right? If we're making the most out of, doing the most for you all and our community members and our investors, that means we have to have explicit focus. We can't do everything. And so aligning your proposal to those core focuses is going to increase the chances that we say, oh yeah, we absolutely want to do that with you, right? Otherwise, we usually decline. And it's not because we don't believe that, whatever you're offering doesn't offer a lot of value. It probably does, but it's not aligned with those core focuses that we have.
Okay, thank you, John, for your question. Yeah, so I think we are enough for now. Yeah, thank you guys, and don't forget to join the community. So Robby, so before wrapping this session, do you have anything else? As far I know, we covered everything, but any important news or any information that you wanted to share with us before wrap this session?
No. Well, the one piece of alpha that I can drop is that we will introduce a working lottery. We'll likely introduce the working lottery feature before the token comes out. So basically, if you take certain actions on the protocol, we'll do a lottery of those people who have taken those certain actions, and they can, win quite a lot of money in USDC, like up to $10,000. So yeah, that likely will be coming soon. Please, check us out, join the Telegram, give us feedback, and I appreciate your time.
Yes, thank you. And also wish you good luck for the future. And thank you for your time also. I would like to thank you all of our participants for having here, guys. So good luck and have a nice day. Thank you, Robby, once again.
Thank you, guys. Appreciate it. See ya.
Bye, everyone.